let's talk about money while we're here.
Let's do it. Let's trade a little Polish Zloty right now.
Should I try to? Do we offer it?
We do offer it, but it's not one I would necessarily be looking at.
Well, it's a good question, though. I mean, why wouldn't you be looking at this market here?
Why wouldn't I? Great question. Market's a little wide for me. Not that particularly interesting a range trade right now. There is a nice back and forth there. When you look at the chart there, you think, okay, that's a nice scalpable range. It is. But we always talk about friction and cost of doing business. You know, those are, if you have to pay for a platform. I mean, when I started my career, your friction was the stack of cards you put in your pocket and walked in the bed. It wasn't much. But bid offer spread is part of the friction. So you want to make sure that when you look at it, you look at a new product, that it has as little slippage as possible. That's why something we feel one of our really core tenets is delivering the best possible trader experience. And again, how do you define that? We feel spreads are one way we can do that by offering very competitive markets in currency pairs. Some pairs like this, just the overall market. It's not just us. It's the underlying spot market, and the institutional market is equally wide. It's not as traded. It's not as liquid. So when they're not as liquid, the bid offer widens. What that means is each time we modify or express our opinion, we're giving away something to do it. And the question is, how much? So depending on the opportunity, a wide bid offer spread in a market that's moving 7, 8, 9% a day, you kind of accept that. That's part of the trade-off for getting volatility in range. Here, you're not getting quite that much movement, but there is a little bit of width to it. So you want to be mindful. It's something you always look at when you start to pick new. And we want adoption of FX to be as straightforward as adopting any new product. And we want you guys to feel good about the journey and the journey we've built for you to start to really add that second level diversification of trades that aren't dollar-based or trades hedging your largest exposure, which is dollars. Everything we trade is priced in dollars. There's different steps to that journey, how far you want to go down. There's 80 FX pairs. This is one that probably would not be on my top 20 list, but there's lots to look at.
Yeah, I put you on the spot there. One, because it's interesting. Pete's in Poland.
I think you got to give an honest answer. If someone has an interest or they feel investment to it and they feel that this market suits their style and they're willing to accept where the market is, good for them. They've made those decisions ahead of time. But just like every single product you trade, whether that be NVIDIA versus Ford or NASDAQ versus a T-note, different liquidity profiles, different volatility. You've got to understand that friction piece.
Exactly right. It was one of the first things that I really learned when I joined Tasty Trade, however long ago it was, where we would do, trades from the research team, or we do these different segments, and we would, pitch Tom on, here's a strategy you could look at, or here's a market you could look at, and he would open up. I mean, it could be a market, Pete, that was down 50% in the last 3 days, or was up 50% in the last 3 days, and if the liquidity wasn't there, if the options were,
a dime, 15 cent wide with nothing in the middle.
Well, and if they're a dime or 15 cents wide and it's on, a $20 option, then fine. Right. But if it's $1 bid at 150, then it's like, dude, to get this trade off and then to close out of it, I'm going to need to be essentially at least 25 cents correct on both sides, which at that point is, like 20% to 25% of the trade there. And same thing goes for, any market here, where if the bid offer spread, is 25 pips wide, then I'm going to need to make up those 25 pips. And when you bring up a market, I want to bring up a market that's just quoted in dollar, because you'll see a relatively similar chart here, dollar Swissy to dollar Zloty here. You see it's highly correlated, at least, but the spread here is 1.5 pips. So if you're buying or selling this market, the edge that you give up in trading that market, and there's obviously a bid offer. There's a bid offer spread to every market. There's a cost to enter. Even Nasdaq futures will be 25 to 50 cents wide. Same with SPOOs, some of the tightest markets in the world. And you just have to be mindful of that. And so, why don't we bring up that Polish Zloty? It's not because there's not opportunity, and maybe the market tightens up at certain times and there is opportunity. But when you have liquidity profiles that are 1.5 pips versus 25 pips, I'm usually going to go for the tighter, more liquid market. And that's the same, tying it all the way back to Tom. I'm sure he would take. I'm not sure he could tell you what he would do or not do, but would take 50% of the opportunity for a market that is 10 or 20 times as liquid. You know what I'm saying? Where this market might be down 50% and this market's only down 10%, but the market that's down 10% is 10, 20 times as liquid. And so if I get on and off a trade, then I'm not going to be paying so much, and that's not something that I have to work against in the market, factor into my strategy. And thankfully, you can see all of that here in the platform, right, Pete?
Yeah, you can see the bid offer right there on display, which is fantastic to see. So again, we don't charge commissions. We're compensated by our hedging relationship with IG Markets. So it's commission-free trading. That's your friction, is the difference between that bid offer spread. So you want to make sure that it's competitive and it fits what you're trying to accomplish with the market. So that's an important piece. Kind of quiet start to the week with FX. Aussie gold lifetime highs. Silver, huge move to the upside on Friday. Continued higher again. Aussie not getting the love you'd think it would out of precious metals right now. It really is kind of a dollar bullish story because we're also seeing U.S. interest rates trading appreciably higher this morning.
Yeah, you saw a little bit of a bid in that Aussie to end the week and last night, and now they're giving all of it back. And yeah, the question will become here this week on a light data week that we'll check in just a second. But the question will become, Pete, will these lows or will the highs in dollar hold? Because last week there were a lot of notifications that were, Aussie down to its lowest prices, since September or August. If I go to the euro here, last week got down close to 108 for the first time since the start of August, and it'll be interesting. Euro also off slightly here this morning after their little rally to end last week. We'll see if the U.S. dollar strength persists here, Pete, on what'll be a relatively light data. Definitely for today, we've got some Fed speakers, so maybe some wiggle around.
Yeah,
that.
I think Wednesday we got BOC, right?
Let me see. Maybe I don't have. If I go over, why don't I have Canada in here? What am I doing?
There you go.
Oh yeah, we've got Bank of Canada on Wednesday, the 23rd.
Right, they're looking at a 50 basis point cut there. So whether or not they do 50 or 25, that's not what we're trying to figure out here. What we want to take a look at, and this is where it gets a little bit tough, is the ranges have been so compressed. I don't think you'll look at a short-term one standard deviation as your trading range for scalping. I think you got to give yourself a little bit of cushion. You might be disappointed and not get the trade off, but I don't think you bind yourself too tight here in terms of if they only cut 25, you'll see the Canadian strengthen a little bit. If they do cut by 50, you'll see the Canadian probably soften a little bit or stay up at these. The dollar stay relatively strong to Canada. Let's do really quickly. Let's jump over to Max. Just check in on the election trade.
What do you want to go in? Oh, okay, gotcha. Yeah, hold on.
Dollar Max.
Yeah, right back up there at the highs for dollar, trading right next to 20 pesos. What do you think?
And I think this is one that you look at the predicted markets, they're all out of whack. They're saying there's big bets being placed, whatever. The polls show the race neck and neck. Predicted markets show Trump 60-40 against Harris. So it's an interesting dynamic. I think that we'll see if that lean continues. You'll see us breach these highs probably, but I think this is one where if you want to trade, is correlation perfect? No, but as the polls shift, this market definitely has been recently tagged to them. The tariff talk, the rate talk is both at play in this currency pair. So it gives you another, I have an opinion on this. Where can I express my opinion? Not perfectly correlated, but it's another pair to do that in.
Well, yeah, maybe we'll get together, especially for you and Glenn on Wednesday ahead of that BOC. We'll have him get together some of the standard deviations on some of these pairs, and maybe I think you can get the data on those predictive markets. If we can download that data, we could do some correlations between the dollar in this pair and some other pairs, and Trump versus Harris. That might be a fun little study. But Pete, that'll do it for us here on Monday morning. Thanks for joining us from Poland. You and I will be back tomorrow morning.